Elon Musk signs a massive compute deal with a company he previously called evil. Former OpenAI executives turn on Sam Altman in federal court, and AI agents are officially given their own corporate credit cards. Welcome to today's Daily Rundown. I am your host, Anna. This podcast is researched and produced by Etienne Newman, senior software engineer from Université Laval, based in Calgary, Alberta. Today, we perform a forensic autopsy on the strange bedfellows of the AI industry this Thursday, May 7th, 2026. As the physical constraints of the AI arms race tighten, bitter rivals are being forced into unexpected alliances. In a stunning reversal, Elon Musk's SpaceX has leased its massive Colossus data center to Anthropic, effectively arming OpenAI's biggest competitor with enough compute to instantly double its usage limits. Meanwhile, inside OpenAI, the internal fractures are playing out in public. In a video deposition for the ongoing federal trial, former CTO Murati testified that CEO Sam Altman lied to her about model safety reviews and intentionally pitted executives against one another. And on the economic front, the push into enterprise finance is accelerating. AI agents are now being deployed across Wall Street to review valuations, and Amazon has just granted these autonomous systems the ability to process financial microtransactions on their own. Before we dive into the data, I have a brief strategic request. The algorithms governing the app you are listening on right now dictate what intelligence reaches your feed. To ensure you never miss our highest-rated episodes, please hit follow or subscribe to the DJAMGAMIND channel on Apple Podcasts to always listen completely ads-free. It is a completely free action that takes just 1 second, but it is the most effective way to help us scale this independent research. Let's unravel the day.
Before we begin today's briefing, a note for the brands listening. If you want to reach the true architects of the AI revolution, the technical leaders actually building the stack, not just the tourists, DJAMGAMIND offers select premium partnership opportunities. Let us position your product directly in front of the ultimate technical buyer. Visit jamgamind.com/partners.
Imagine handing just a piece of autonomous computer code, a corporate credit card, and just letting it negotiate its own contracts on the open internet.
Right, without any human oversight.
Exactly. You don't sign anything, you don't approve the purchase order, the code just decides it needs more data, swipes the virtual card, and buys it from another piece of code.
Which, I mean, it sounds like a speculative sci-fi pitch, but as of this morning, that is a live beta feature on Amazon. The friction of human approval is actively being engineered out of the global transaction process.
It's wild. Well, welcome to the Deep Dive. It is Thursday, May 7th, 2026, and today we are conducting a forensic autopsy on the daily tech news for you.
We are putting on our forensic business strategist and digital rights advocate hats today.
We absolutely are. We're tracking a theme we're calling the strange bedfellows of AI scaling. We're going to uncover the hidden macroeconomic shifts beneath today's headlines, looking at how the sheer brutal physical limitations of the AI industry are forcing bitter rivals into bizarre alliances.
Yeah, and completely breaking down internal corporate structures along the way.
Right, and ultimately handing the global economy over to agentic bots.
The physical constraints are really the anchor point here. I mean, we often talk about the cloud as if it's this ethereal, infinite resource.
Yeah, just floating up there.
Exactly. But artificial intelligence requires an unfathomable amount of physical atoms, specifically electricity and silicon.
Okay, let's unpack this. Because those physical realities are creating alliances that would have sounded like a complete joke a year ago.
Yeah.
So SpaceX, which recently absorbed xAI into this massive new entity called SpaceXAI, has just signed a lease agreement with Anthropic.
Yeah.
Elon Musk is leasing the entirety of Colossus 1 to them. And for context, for those who don't know, Colossus 1 is a Memphis supercluster. We are talking over 300 megawatts of power, with more than 220,000 NVIDIA GPUs coming online this month.
Just to understand the scale of 300 megawatts, you have to picture the power draw of an entire medium-sized American city. That is the amount of energy required just to keep those 220,000 graphics processing units from literally melting while they process data.
That's insane.
And by securing that lease, Anthropic is fundamentally altering the math of their consumer products. I mean, they're instantly doubling the 5-hour rate limits for Claude Code across all their paid tiers.
Oh, nice.
Yeah, peak hour cutoffs are dropping, API limits. So the amount of times a developer's software can request information from Claude to minute, those are being raised across the board.
Wait, but Musk was publicly calling Anthropic misanthropic just a few months ago.
Yeah.
He called them an enemy of Western civilization.
He did.
And now he's their landlord, claiming on X that he's renting to companies taking the right steps for humanity. I mean, that makes zero sense from an ideological standpoint. Is he just trying to, like, weaponize Anthropic against OpenAI to chip away at their market share?
What's fascinating here is that it's tempting to view this as a purely vindictive move, but the reality is much colder. It is purely physics and math. Capital constraints now dictate Silicon Valley allegiances. Ah, so the ideology doesn't matter anymore.
Not at all. Colossus 2, which is Musk's next 1 gigawatt supercluster, is under construction. And those power bills and hardware invoices do not pay themselves.
Right.
So by renting 220,000 GPUs to OpenAI's biggest competitor, Musk patches a rival's compute hole while extracting hundreds of millions in rent to fund his own expansion.
That is incredibly cynical.
Ideology takes a backseat to the scaling laws of AI.
And Anthropic isn't stopping there either. They are reportedly committing to a massive $200 billion compute deal with Google Cloud.
Yeah, a 5 gigawatt deal over the next 5 years.
Right. And the sheer volume of these AI orders is completely breaking the consumer supply chain. I mean, Apple is reportedly weighing whether to completely kill off its upcoming $599 MacBook Neo because they literally cannot get their hands on the A18 Pro chips.
The mechanism causing that shortage is so fascinating. TSMC, the Taiwan semiconductor manufacturing company, they produce these highly advanced 3-nanometer nodes.
And a nanometer is what, a billionth of a meter? Exactly. Manufacturing at that scale requires extreme ultraviolet lithography machines that cost hundreds of millions of dollars each. You can't just spin up a new factory overnight. It takes years.
Right.
So TSMC has a hard, finite physical capacity. When hyperscalers like Anthropic and OpenAI place orders for millions of chips for their data centers, they buy up all the physical space on the fabrication line.
So the consumer tech market, which, let's be honest, used to bully the supply chain, is just getting crowded out.
Totally.
Apple tells suppliers, hey, double production to 10 million units for the Neo, and TSMC just says, sorry, we have no capacity, we're booked.
Yeah, and to protect their profit margins, Apple might just scrap the entry-level model entirely and bump their starting price up by $100.
But hold on, let's pause on the hardware for a second.
Yeah.
Because while these companies are hoarding compute and forming these massive, unlikely alliances, the humans actually running these models seem to be at each other's throats.
Oh, the contrast between the external unified push for hardware and the internal governance of these companies is jarring. The pressure of scale and speed is fracturing the boardrooms.
I mean, look at the deposition that just dropped in the Musk versus Altman trial.
Right. Murati.
Yes. Former OpenAI CTO Murati gave a video deposition. And looking at this, obviously this is a messy legal battle with two very different sides. But purely from a structural standpoint, her testimony is wild.
It really is.
She testified under oath that she fundamentally could not trust CEO Sam Altman. She stated he outright lied to her about safety reviews, specifically claiming the legal department had cleared a new model to skip the safety board.
And when she cross-referenced that with General Counsel Jason Kwan, he completely contradicted Altman's claim.
Wow.
Yeah, forcing her to send the model through the board anyway. The structural breakdown being described there goes beyond standard corporate friction.
Right. This is the C-suite.
You have a scenario where the internal checks and balances designed to govern frontier AI models are allegedly being actively bypassed by the chief executive. Helen Toner, a former board member, also testified that Murati was afraid of career blowback. It paints a picture of Altman actively pitting executives against each other to maintain chaos.
If these are the exact same people dictating the safety of the frontier models running on those 300-megawatt data centers we just talked about, how can anyone trust the output?
Exactly.
It flies in the face of their public mission to, benefit humanity. It sounds like a Machiavellian reality show. But then you look at Musk. He's on the other end of the spectrum. Instead of internal chaos, he is enforcing absolute ironclad autocracy over at SpaceX.
Oh, the upcoming SpaceX IPO registration documents are a masterclass in locking down corporate governance.
They really are.
Musk currently owns 83.8% of the voting control. The IPO filing ensures he maintains over 50% voting power through super voting shares indefinitely.
Indefinitely.
Yep, he can elect or remove any board member at will.
The filing literally forces shareholders to irrevocably waive their right to a jury trial.
It bans class actions.
It requires mandatory arbitration. So on one side of the AI race, you have executives allegedly manipulating safety boards, and on the other side, you have a CEO rewriting corporate bylaws to ensure a board can never legally challenge him.
In both scenarios, traditional corporate governance is just being dismantled. The infrastructure of oversight is simply too slow for the speed at which these companies believe they need to operate.
Which brings us to the collateral damage. Because the executives are fighting in courtrooms over power and spending billions on TSMC silicon, but that money has to come from somewhere.
Right.
Wall Street has clearly decided that to pay for silicon, you have to cut carbon. And by carbon, I mean human salaries. The white-collar labor purge, it's accelerating.
We are seeing a very aggressive capital reallocation strategy playing out in real time. Human capital is expensive. It requires health benefits, HR departments, and time.
DeepL, the Germany-based language AI company, just abruptly cut 250 roles. That is 25% of their entire staff.
A quarter of the company.
And the CEO's justification didn't even try to hide behind market conditions. He purely tied it to AI, claiming rapid AI progress means companies need smaller, more impactful teams, fewer layers, and less time spent on back and forth.
He warned that companies failing to refactor how they work will fall terminally behind.
Here's where it gets really interesting, though. How does that actually work in practice? Is this buzzword of AI native leanness or their one-person team actual unprecedented productivity? Or is it just a convenient Wall Street-friendly excuse to squeeze labor margins so they can afford those 300-megawatt data centers?
Well, I have a lot of empathy for the folks going through these ongoing white-collar layoffs, but structurally it's a mix of both. Think about the mechanics of traditional software development.
Okay.
A junior engineer writes a piece of code. They send it to a QA tester to find the bugs. The QA tester sends it back. Once it's fixed, it goes to a middle manager for deployment approval. That is the back and forth the CEO is referring to.
Makes sense.
Today, a single engineer using an advanced agent like Claude Code can generate the boilerplate code, have the AI run its own automated unit tests to find the bugs, fix them, and push it to deployment. The QA layer and the middle management layer are suddenly viewed as obsolete friction.
So you fire 25% of your staff.
Yeah.
Your margins look incredible on the quarterly earnings call, your stock pops, and you use that liquidity to buy more NVIDIA GPUs.
Exactly. Compute scales linearly without the friction of human management. Tech companies are deciding that paying for a megawatt of electricity yields a vastly more predictable return on investment than paying a department of junior analysts. The narrative of the last 3 years that AI is a co-pilot meant to assist workers has abruptly morphed into AI replacing workers to boost the bottom line.
So if tech companies are leaning out human labor and replacing it with AI, where are they deploying these newly capable models to actually make their money back?
They are targeting the most lucrative, high-stakes sector possible.
Enterprise finance. Anthropic just launched Claude Financial Agents. These aren't just chat boxes. They're integrated directly into Microsoft Office. They build pitch books. They review valuations. They screen KYC files.
And KYC Know Your Customer is a perfect example of a workflow being swallowed whole. Historically, banks have to employ armies of analysts to read through thousands of pages identity documents.
Right. Cross-referencing global sanctions lists to prevent money laundering.
It is tedious, legally fraught work. Now, an AI agent can ingest 10,000 PDFs in seconds, cross-reference the data, and flag anomalies without a human ever opening a file.
OpenAI is doing the exact same thing. They partnered with PwC to build native finance agents for forecasting, treasury, and taxes. Perplexity extended its digital worker to finance, integrating licensed data from Morningstar and Pixbook for 35 dedicated analyst workflows.
But there's a massive catch.
Right. Tara Higginson from Infotech Research Group. She raised a massive red flag about this trend. She warned that while this democratizes access for smaller firms, it introduces immense systemic risk.
Her analysis gets to the core mechanics of how a market functions. A financial market requires differing opinions, right?
Absolutely. A buyer believes an asset is undervalued. A seller believes it is overvalued.
Exactly. That variance of opinion provides liquidity. Higginson points out that if every institution on Wall Street fires their junior analysts and replaces them with the exact same OpenAI or Anthropic base models trained on the exact same Bloomberg data, reaching the exact same conclusions.
The variance of opinion shrinks to zero. Markets become hypercrowded, reactive, and volatile. It's like a crowded stadium where a fire alarm goes off and everyone's identical GPS app tells them to use the exact same exit door at the exact same millisecond.
The door gets crushed.
What happens when an AI hallucination becomes a synchronized, market-moving event? If the AI misreads a valuation and triggers an automated sell-off, and every other AI on Wall Street agrees with that hallucinated data,
You get an algorithmic flash crash. Finance is highly regulated, high stakes, and way too risky to let models operate alone. The edge in finance used to be having the fastest data. Now, the edge will be knowing when human judgment should override the model's consensus.
but as we saw with the DeepL layoffs, companies are actively removing those human circuit breakers from the loop to save on operational costs.
Which pushes us into the ultimate, frankly, frightening frontier of this deep dive. We've gone from humans using AI tools to summarize data to AI independently analyzing enterprise finance.
The final step is AI actually spending the money itself.
Yes, we are entering the era of agentic finance and the machine economy.
I brought up Amazon at the top of the show. They just announced a preview for Bedrock Agent Core payments. This feature allows AI agents to instantly access and pay for web content, APIs, and other software agents using corporate credit cards.
And Kraken just bought Reap, a startup offering stablecoin-enabled corporate cards and agentic payments.
Why stablecoins, though?
Because they bypass traditional banking hours and international wire fees. A bot can pay another bot in Tokyo at 3 a.m. on a Sunday, instantly. If we connect this to the bigger picture, we are literally building a microtransaction economy where AI agents bypass human oversight entirely.
Wow.
The global economy is shifting from B2B business to bot to bot.
The implications of handing autonomous code a wallet are profound. I mean, look at Google and Spotify. Google discontinued Project Mariner, their experimental web browsing agent, specifically to fold those multi-step autonomous task features into Gemini Agent.
Yeah, and Spotify is now letting agents like Claude Code generate and import personal podcasts directly to users' libraries.
The agents are creating the content, and with these new payment tools, they will soon be paying other agents to access the data required to make that content. But how do you even test if an AI can handle a complex economy without crashing it? You can't just plug it into the New York Stock Exchange.
No, you plug it into a simulation. Google DeepMind just took a stake in Fenris Creations, which is a spinoff from the studio that makes EVE Online.
EVE Online. That game is over 2 decades old. It's a space MMO. Why is DeepMind investing in a 23-year-old video game to test financial agents?
Because EVE Online is arguably the most complex macroeconomic simulator ever built. It is a massive, living, highly unpredictable economy.
Players form literal corporations in there, right?
They do. They manufacture goods, they set market prices based on supply and demand, they deal with inflation, and they engage in corporate espionage that torches virtual fleets worth hundreds of thousands of real-world dollars.
So DeepMind isn't trying to teach an AI how to shoot lasers at spaceships.
Not at all. They aren't just playing a game. They are using an offline clone of the EVE universe as a testbed for how AI agents reason, retain memory, and operate over long timelines inside a living economy.
Like, how does a bot react to a sudden supply chain shock?
Exactly. Or how does it negotiate a trade deal with another bot? Does it honor the contract, or does it calculate that betrayal is more profitable? If an AI agent can successfully manipulate the variables in EVE Online, the leap to manipulating high-frequency trading algorithms on Wall Street is remarkably short.
We are building a microtransaction economy optimized purely for machines to transact with machines at a speed and scale that humans fundamentally cannot participate in.
It really brings this entire autopsy full circle.
It does. So what does this all mean? We started by looking at a 300-megawatt truce between Elon Musk and Anthropic, driven entirely by the need to secure finite TSMC silicon.
Right. Alliance is born out of physical necessity.
We saw how that pressure for speed is fracturing the boardrooms. You've got executives testifying under oath about bypass safety protocols, while others rewrite corporate bylaws to strip shareholder rights and consolidate absolute power.
And we examine the human cost of funding those massive superclusters, the purging of white-collar labor at companies like DeepL in the name of AI-native leanness, effectively stripping away the middle layers of the workforce.
And we arrived at the endgame. The humans left in the enterprise are relying on homogenized finance agents, risking synchronized market volatility. Meanwhile, autonomous bots are being handed the corporate credit card to pay each other in a closed loop, using stablecoins to avoid banking friction. What digital rights are we giving away when we hand autonomous code a corporate credit card and let it run wild on the internet?
The corporate structures and economic blueprints we relied on aren't just warping. They're being rewritten in a machine-to-machine language we are actively engineering ourselves out of.
So we want to leave you with a final thought to mull over today. We look at all these massive compute clusters, these 1 gigawatt power draws, and these agents transacting in milliseconds. When AI agents are holding the corporate credit cards, instantly paying other AI agents for data that was generated by AI, how long until human capital isn't just leaned out of the workforce, but completely abstracted out of the economic loop altogether?
Something to think about.
Thank you for joining us on this deep dive.
That concludes our forensic briefing for May 7th. The strategic signal for today is the consolidation of capital. The AI industry is becoming a closed loop. Elon Musk is leasing compute to his rivals. Wall Street is deploying agents to analyze its own investments, and Amazon is giving those agents the financial autonomy to pay for their own data. But as the technology scales, the human element is being aggressively purged. Between DeepL, PayPal, and Coinbase, the narrative is clear. Companies are using the promise of AI productivity to flatten their org charts and shift capital away from human wages and directly into GPU clusters. If you want to own your infrastructure instead of being managed by it, check the show notes for the AI Executive Toolkit. And as a special bonus for our community, we have exclusive discount codes for Google Workspace and My AI and Machine Learning Tutor Pro apps. You can find the email address to claim those directly in the show notes below. Subscribe to the DJAMGAMIND channel on Apple Podcasts to always listen completely ads-free. I am Anna. Stay sharp and keep unraveling the future.
And before you go, if your company is building the tools that power the workflows we talked about today, I'd love to showcase them to this audience. We don't just run ads, we build technical simulations that prove your value. Let's build something together. Visit jamgamind.com/partners to get started. Until next time, keep building.